risk, we can look at risk in terms of market risk appetite. So what is the yield in a given asset class, in this case equities, compared to history? The higher the yield, of course, the cheaper the market, and the higher the idiosyncratic risk of a country, the higher we'd expect that risk to be. That's at a macro level. Now at a company level, we look at a lot of areas of risk. This becomes particularly relevant for investors looking to do due diligence into companies where transparency may not be that great, where disclosure may not be that great. Typically, there are 4 types of risks that we look at. First of all, operational risk. How good is a company at creating wealth? If it is wealth creating, is it focused on growing its business? If it's wealth destroying, is it focused on disposing of assets to therefore improve its wealth profile? That would be point 1. The second element of risk would be balance sheet risk. Are companies growing at rates that are unsustainable, that might jeopardize their credit rating and their ability to actually service their debt? Third area of risk would be accounting risk. One of the measures we look at are the level and volatility of particular line items on a balance sheet, cash flow statement, or income statement. Any area that's particularly volatile or growing should be at a very least an invitation to dig in and see whether that trend is benign or is possibly hiding something more serious. Fourth area of risk we look at is corporate governance. To what extent are CEO pay packages aligned with the concept of wealth creation? Now, any one of these may have perfectly benign explanations. We'll never profess to say we can predict potential areas that could blow up, but it's uncanny if we look beyond Africa, the number of stocks that have come under scrutiny recently because of particular risks, be it Volkswagen, be it Valiant, be it BP historically or Tesco, all had at least 2 such characteristics that should have been an invitation to at least dig in and get some level of comfort on the quality of management. This becomes particularly critical in an African context, not so much because of fraud potential, but purely to get a level of comfort on the quality of the investment.